The high-tech industry got affected the most with more layoffs in the last quarter of 2022 and in 2023. So if you plan to buy properties in city with heavy high-tech concentration, then you must... Hi, and welcome to my channel. After reviewing some economic data, there are a few things that I would recommend you to look out for in 2023 to assess your potential risk and reward. I will share some facts and data that we need to look out for in 2023 and whether some of this data will affect your current portfolio or the new projects you may have in mind. I also want to share a few questions that I will use to weigh the potential risk and potential rewards. You can use them to double check your own decision making. If this is your first time visiting my channel, please subscribe and turn on the notification bell. My name is Korianne. I am a real estate investor since 2001. I make videos to share my real estate investment journey that got me to be financial independence after 8 years of investing in cash flow properties. Hope to inspire you to invest in cash flow real estate so you too can achieve your financial independence, build a legacy, and make an impact on people around you. The important data to watch out for is number one is the interest rate by the Fed. Will the Fed increase the interest rate again this year? By how much? As of recording today, we are 2 days away from the next Fed's meeting. The higher the interest rate gets, the less buying power new home owners have. This forces these potential home buyers to stay renting, and that in turn keeps the demand for the rental housing high. I anticipate that if the cost of rent is cheaper than the cost of owning a home, then the rental market remains strong. I do not, however, anticipate the rental increase like what we have seen in the last 3 years. Most sellers who have been holding on to this property in the last few years may have locked in a mortgage as a very good low interest rate. So they will not likely to wanting to sell unless due to some emergency. On the other hand, properties with an adjustable rate or with no cap on the interest rate will run a higher cost of capital, will and can force the owners to find way to exit by putting their property on the market. In cities with heavy concentration of high-tech company, we can anticipate there will be even more inventory and correspondingly a higher compressions on the prices, especially when many of the cities have also enjoyed higher real estate growth in the last 3 years compared to the national average. Some of these implications will play out in 1 or 2 quarters. Some cities will not get price corrections relatively because they did not have high growth in the last 3 years. Most of the Midwest cities have had steady growth and the labor markets are healthy with income supporting the housing prices. In 2023, we can anticipate the cost of capital will likely to increase another 50 to 75 basis points because the Fed will moderately increase it to control and reduce the inflation rate to their desired rate of 2 to 3%. If you watched my video a few months ago about the anticipations of interest rate going up to 7 to 10%, and you managed to lock in a good fixed rate when we was in the 3 to 4% range, congratulations! Compared to our current range of 6 to 7% now, I think we'll be in this range or a bit higher for another year until the inflation rate reduces to the Fed's target. Number 2 thing to look out for is unemployment rate. The current unemployment rate is about 3.5% of the labor market, so it looks healthy. If the employment rate increases into about 5% range, then the Fed may take a pause on the rate hike. The high-tech industry got affected the most with more layoffs in the last quarter of 2022 and in 2023. So if you plan to buy properties in city with heavy high-tech concentration, then you must anticipate home price correction in the next few quarters. High-tech companies may take a couple of years to start hiring again. And if these unemployed individuals cannot find their new jobs in the timely manner, then home price will be impacted negatively when there is a larger inventory available on the market. Most of the high-tech companies are located in major cities, and the home prices in most of these cities are above the national average. They are San Francisco, Seattle, Austin, Boston, San Jose, Los Angeles, Denver, and Raleigh, New York, and Chicago. As an investor, be sure to always run your numbers to make sure the project is good. In any given economic environment, whether it's up or down or sideways, as covered in a couple of my previous videos and also in my 5 steps videos, here are just some of the factors for you to consider when you evaluate a real estate opportunity. Population growth, job growth, diversified employment mix, median household income, median home price, affordability, understanding the cost of your debt. I'm going to share the risk and reward questions in evaluating a real estate opportunity. Here are the few questions that you can ask yourself in order to assess possible risk versus potential reward. Is the project acquired at the right price? Will the property hold its value in the future with a steady growth? You cannot predict the future, but you can mitigate your investment risk by using facts and data to anticipate the likely outcomes. For example, if the city is projected to have 1 or 2% population growth annually in the next 5 years, then you know the demand for housing is intact. Thus, the cost of capital secure in the next 5 years. Should you do a variable 5-year fix or the 30-year fix? Be deliberate and disciplined in borrowing money. Is the rental price affordable? Will the local income qualify for the products you offer? Use this question to research your market and to make sure this data support your assessed potential risk and potential reward before you pull the trigger on your next investment. You cannot time the market, but understanding the fundamental data will help you make a smart, logical investment decisions. So that's it for today. If you enjoy this content, then click the thumb up for me, please. And also subscribe too. This helps my channel a lot. Thank you for doing it. So share with me in the comment below. What do you think about the 2023 housing market in your city or your target markets? Thank you so much for watching. Let's learn, invest, and make an impact. Ciao!